All right, so what I'm going to be doing here is we're going to be looking at new day opening gaps, new week opening gaps, and first percentage fair value gaps. And this is all from what I learned from ICT. And I've been trading for about 5 years. And many of you at home also have probably been through seeing profits and then losing them, failing your funded accounts, options trading, whatever it is. And for me personally, I'm tired of losing. And what I'm gonna do here is I'm gonna be doing what I'm doing, this exactly what I'm doing, how I've done before. But this time I'm going to be doing actual journaling, reviewing my mistakes, and actually digging into why I'm failing. So without further ado, what we're gonna do here is what we're gonna first mark out is the new week opening caps. And what that is on Friday's close, we have the whole weekend and the market opens on Sunday. So that is what new week opening gap, and I will explain a little bit in more detail exactly what that is. But what we're gonna do is we're gonna mark the last 5 weeks. We're gonna label 2 points, okay? We're gonna label the close on Friday, which would be right here. And we're gonna label the opening on Sunday at 6 p.m. So since we can't do a 1 minute time frame on this one, we'll go on a 1 minute time frame on the next ones. But the main idea here is on Friday's close at usually it's 4:59, and this is on Eastern Standard Time. So we're gonna do the close there, and then the open on Sunday at 6 p.m. So we have those 2 points, but what I like to do is if we have a big range, so this was about like around 89 points. So we're gonna label that. That is our new week opening gap. So now that we have that one, we're gonna go a little bit further to our second line. And this one, I believe we can go to a 1 minute time frame, hopefully. No, we can't. So we'll go back to a 5 minute. Okay, so we have this one, and then we have this one right here. And the reason I'm doing this is because we're gonna go back to the first 30 minutes of the opening range, and this is all in Eastern Standard Time. So we have 9:30 to 10 o'clock. Very key time. And what we're gonna do here is we're gonna label the first fair value gap, which is this one first. And I'm going to do more research, but I'm pretty sure that we don't use the first candle. I'm pretty sure 9:31 to 10 o'clock is what we use. So during those first 30 minutes, what we're gonna do is label the low of those first 30 minutes, and then we're gonna label the high of those 30 minutes. So we're just gonna extend it something like this, just to have an idea of what price actually does. So we're gonna now remove these two so it doesn't get too much crowd. Okay, so for those that don't know what a fair value gap is what ICT analogy, the way he interprets it, is just how as a painter paints a wall with his roller, sometimes the painter paints too fast up, and naturally what the painter wants to do is go back down into that where he painted fast, because you don't want a wall that's not painted nicely. So as a painter goes up fast, he's going to want to go back down and fill that price in. So that's the idea of what a fair value gap is. On this case, it's when the market goes up, and it can also do vice versa. So we labeled this box here and that box there where the first strong reaction up happened, and it can be with the going down. But here's a good example of how price action reacts to these fair value gaps and how you can use them to your advantage. So we have this green box here that we have high to low, and then we have the 50% around this level right here. And you can see that the wicks go outside this fair value gap. And another important analogy that I've learned from him, ICT, is that sometimes the price goes below the fair value gap, but overall the bodies of the candle stay up. Just how we see here, we have a bunch of wicks that go down, but the bodies of the candle is staying above this fair value gap. And to explain why the wicks go down, another analogy he uses is that a kid sometimes, he has his coloring book, he has his drawing, and he has his crayon. And sometimes that kid is not going to be perfect. He's a little kid. He's going to paint outside the lines. But overall, he obviously wants to stay inside that drawing. And the same can be said as price action. Sometimes we color outside the line, but overall, the bodies of the candle is staying inside that little drawing that we're trying to color in. And that's a good indication that you can use to your advantage. So you can start seeing what price is doing and what it wants to do. So if we mark out that first fair value gap, also the low and the high during those first 30 minutes, we can see price comes back down. Sure, it colors outside the line, but the bodies of the candles stay inside of it. What do we do after? Okay, we make a high during those 30 minutes. Market goes down. We eventually take out these highs. Didn't mean to do that. We take out those highs and we leave a huge wick. Okay, using the new week opening gap, we see that price goes down, and you see how it touches this first presented fair value gap, and ultimately taking out the low during those first 30 minutes. I'm not saying that I know how to trade this yet, but we can start identifying and seeing like what the market does and how we can start creating our own plan in this. So now that we've taken out this low, now we see a strong reaction higher, and we have reached the high of the new week opening gap. And I still think that we want to reach these relative equal highs, which would be right here. And then we also have a new day opening gap. So that being said, we can start identifying where would be a good place to buy if we think that we are going to reach these high levels. So when we go to a 15-minute time frame, we can see that we left. Okay, I'm going to change this to green. So this is going to be on a 15-minute time frame. We drew the same box. We painted too fast up. And what price is going to want to do is it's going to want to paint back down so it can be balanced. We don't want a wall that's left, with holes. We want to come back down and paint it so we can fully have a nice wall. And this is what's occurring here. We come back down, and price usually wants to touch the 50% of this fair value gap. But you can see that the wicks, just like how we color outside the lines, and we took out the low in the morning of the first 30 minutes, the bodies of the candle tells us the story. You see how it stays above the 50%, and out of that we have a big reaction up, which is beautiful. That's exactly what we want to see as traders, and how we can use that to our advantage. So we can go a little bit deeper on like a 5-minute time frame. Okay, so we're gonna actually put that back to the 1 minute. Okay, so we'll leave that like that so we don't mess anything up. And on a 5-minute time frame, same thing, we painted too high here. So let's say we didn't get into a trade down here. The way I think is that we're most likely going to want to come back down and paint this before going higher up here. So we're just going to let this do its thing, be patient. Okay, so this is I would say a key level, as we have that very small new day opening gap. So right here is where we really want to pay attention. We really want to be focused, so we can start putting into our mind to see what it does. So with repetition, with a lot of focus, we can start seeing how the market behaves. And let's say for those that have already, been trading for a while, then you can start to, I guess, try trading. Let's say we put like a sell order here. This is not financial advice again. And start seeing like, okay, let's say we were to take a trade. Once again, I don't recommend you put any money if you're just starting out. But instead, take a trade using paper money. See if it were to work out using these key levels like new day opening gap, new week opening gap. If it doesn't work out, let the price do its thing, and afterwards look over and see what the price actually wanted to do. And I think that's the hardest part that most traders don't really, not necessarily they don't know how to do, but it's very boring. Most people don't want to do it. For me personally, I've taken trades where I just, buy just to buy, just trying to get money, but it just doesn't work like that. Sometimes, you can get lucky, but it's just, you don't want to trade and get lucky. You want to trade with a purpose, with a plan and an idea that over time that you get better, even if it's just 1% over time. Because over time you start to learn your mistakes, you start to learn yourself, you start to not be scared of taking trades, and you really start doing things with intention instead of just gambling. And that's what I hope to teach people, is to not trade and gamble, but instead trade with intention, with a plan, that you can tell yourself that I learned this with my own plan, instead of saying I traded and gambled and won, but like deep down inside, you didn't win, you just got lucky. Okay, so right here, I'm seeing that price wants to go lower. So what I'm trying to observe here is to see just how I marked out this fair value gap here. And this would be a 5-minute time frame, but we're on a 1-minute time frame. So what I want to see is if price wants to dip into that before going higher. And I also want to take note on what time exactly that forms. I'm not saying that it will, but just in case it does. So like if we have the same scenario for next time, you know, you've journaled it, you've put it inside your mind, and over time with repetition, you can tell yourself, hey, I've seen this before. I know exactly what it did last time, so I can implement that and do it this time. So what I encourage you to do as a new trader, don't put any money. Instead, make a mental note, okay, I think price is gonna go higher. So let's say I bought right now. So instead of just gambling and saying, you know, I just want to make money, instead make a mental note, okay, I would have placed a trade right now. And then see it form and see if you would have been, you know, in the right direction. You know, you just save a lot of money. And I'm telling you guys again, if you're just starting out, don't put money in. Don't do it, please. I'm telling you out of experience, it does not feel good when you lose money. So right here, I do want to see a strong reaction higher above this new week opening gap. If we do close above it, for me, what it's telling me is that it wants to go higher. Right now, we just closed below it. So my instinct tells me that we want to go lower. So it's all about having focus, a little bit of patience. And a lot of observing that I'm doing. So we're gonna go back over here. We're gonna make this only visible on this time frame. We're gonna go back to this one real quick and we're gonna really zoom in. And what we're gonna do is label a fair value gap on the 1 minute chart right here. And we kind of want to see if, just like how we still don't have this 5 minute. Wait, okay, let me go back and make this one only visible in this time frame. Let's go back to this one. So we still haven't filled any of the 5 minute fair value gap on this one. And it looks like we do want to go down lower, so just to make sure, so it's going to be below that 25. Okay, so we're dipping into that right now. So that would be right there. So right here, what we really want to see is how these quadrants react, how the price reacts off of them. So right here, so far, it looks like we have reacted off of that 0.25 quadrant. And what I would want to see here is price going back up. Let me just make sure on the 5 minute time frame. So if I was to place a trade, I do feel like we're very high in the market, but if I was to place a buy order, not financial advice, I'd probably want to do around the 50% around here. So okay, make sure. So this would be around right here. Okay, so right here, I do see a fair value gap here. I'm gonna mark it out so you guys can see it clearly. So it'd be from here to here. We see how the wick, just how we colored outside the lines. The bodies of the candle ultimately is staying inside that fair value gap. And what I want to see here is a strong reaction to the upside. So if we were to take a trade here, we can sell to these people up here. And the reason I think it's going to go higher because we do have this not fair value gap, the new day opening gap. And ultimately, my objective is to reach these relative equal highs. And what I mean by relative equal highs is a lot of highs. We have one high there, 2, 3, 4, 5, around like 6. I would consider this a bunch of liquidity. We also have this one over here. And then we also have the new day opening gap all the way up here. So that is kind of my bias on what price is wanting to do. So let's say we did take a trade here mentally. Our objective is up there, so we want to really study what price does here. Actually there is a little, if we zoom in very closely, we do have a volume imbalance where price just jumps up. We don't want to include it like this. Instead, we want to use that. And let me just show you using the box. So it'd be from this candle's high, where the price jumped up very fast, to that candle's body opening. But I don't like to have a lot on my chart, so we're just going to keep it like this. So again, we're mentally placing an order here. Let's say we bought in here. A very small objective would be right here. So that'd be around, so 46. So that'd be around like 7 points. So once again here, most traders, I feel like they'd be thinking we're going lower. But what I'm thinking is that we're just coloring outside the lines once again. And I feel like we can also keep on going a little bit lower, color outside the lines, but ultimately the bodies of the candles gonna want to stay in here. That is my idea. Not financial advice, obviously, but I like to think, you know, does price really want to stay in there? And if it does it want to fake out traders thinking we're going lower? And let's say it doesn't end up working out and we go lower. What we can see is, okay, if we do go lower, how far lower? And also observe and study that and take, you know, journal notes. So for the next time we do take a trade, we have a better understanding of how price behaves. Alright, so this is after the fact. So after looking back after price did its thing over time. In this picture, it shows that the end dog that we were looking at, which was around here, which would have been the 64 level. These two price points that we had before when we were looking at our chart. and what we were looking for was price to reach into that and to see if we had a rejection. And as you can see, after the fact, after price did its thing, it did end up doing all that, exactly what we said around here. So this observation tells me how we can use the first 30 minutes of the opening bell at 9:30 Eastern Standard Time to 10 o'clock to identify if we are in a buy or sell program. And we were right here in the market when we were watching early in the morning. This was the first 30 minutes, but price was over here when we were looking at it to see if we wanted to dig into that new day opening gap. And by knowing that, the next step would be to identify where the market is likely to go after the fact. And in this case, it was that end dog that we had here that we were watching through the session before I had to leave. So when I left, the price was almost touching it. We were looking for this to be broken right here, and that's where I had left. But after I left, you know, it touched it right here, barely. We had a little small rejection, but then eventually we did go up over it right there. But you see how the bodies of the candles stay below that new day opening gap? And this was on a 15-minute chart. I had to go back in time. I am recording this after the fact, but this is my first video that I'm putting out, so I did want to show you just what happened after. And so for the next videos that I will be doing, they will be similar to this one where I will be doing the same thing over and over again. So, you know, labeling out the first 30 minutes, high and low, first presented fair value gap, identifying if we are in a buy program or in a sell program, and to really recognize how the market behaves and why. So if you guys enjoyed this video, please drop a like, comment, and subscribe to tune into the next one. And until then, I wish you guys the best of luck in your trading.